looking like a really volatile market. We're still in the green, but we've come off from the highs. Lawrence Belanco of CLSA joins in now to give us his view on the charts and which way we're headed. Lawrence, hi, good morning, and thanks for joining us. The MSCI emerging market is now down, about 13% this year. Do you foresee some more pressure, and what are your views on India in particular?
Yes, I think short term we have seen some extremes in our momentum indicators. We also saw some of the fear indicators in the VIX spark up late last week in the US. So what we're expecting is some short-term relief, but the fact that the momentum indicators confirmed the lows late last week would suggest that the rebound that we've seen this week is likely to be short-lived and followed by further weakness. So for both the emerging markets and for the Nifty, I'd expect last week's lows to be tested and probably broken over the coming weeks.
Okay, so you mean 10,140 will not hold?
I don't think so, no. I mean, the next level that we see being at least tested and probably broken is 9,900, which was the lows that we made late March, early April. I think those lows will be tested and the risk of those even giving way.
What stocks or sectors might pull the Nifty down? Will it be pulled down by financials? Will it be pulled down by consumer stocks? Is there any specific laggard for the market?
I mean, if we look at what drove the sell-off from the recent peak that the market formed, it was the consumer discretionary sides led down, in particular by the autos, and then added to that you had the rollover in the banks index. Now, the CNX Banks Index has made a recovery, but it looks like we're going to need some period of consolidation and repair to come through. Like the broader indices on the auto side, we had the momentum indicators confirm the lows last week. So again, we think the bounce that you get in the auto side will roll over and we'll see new lows there.
So the highs of 11,760 that we saw in the Nifty this year, you think that's the best that we've seen for a while? Do you believe that the Indian market has topped out, at least in the near term?
Yeah, definitely for the year. I mean, we had an upside target of 12,000, and we just got short of that at the recent high at 11,750. And looking at the speed of the decline and confirmation, we think the high's in for the year.
Okay, Lawrence, hi, good morning. The other parameter that we track here is Brent crude prices. Your thoughts on looking at the chart? I mean, if you follow it, whether the crude has topped at around 86, 87, Brent crude that is, or do you see a possibility of it going back and reclaiming those highs?
Well, yeah, so we've got an upside target there of 91 to 92, and what's worth noting this week is we did see the pullback with equities last week, but the pullback merely brought price action back to the top of the trading range that we saw develop essentially from March through to September. So $80 is the new support area, and that's what we've respected and held. So we think we're bouncing off that support area, and we're looking for a move up to the 91, 92 area.
Okay, at the moment, the mid-cap index looks like it will get into the red. It's barely holding the green by about 14 points, 13 points. So clearly very sharp selling in the non-bank finance companies, but not only in that space. That's the housing finance space. Repco now down about 10%.
Yeah.
DHFL 7.8%. Indiabulls almost 7%. And then come the rest.
I think when we spotted Repco, it was down about 3%, but the way the shorts were piling on, it looked quite obvious. And housing finance, I think, is a problem more than anything else. Perhaps may not want to paint everything with the same brush. Housing finance.
Lawrence, what about currencies? Do you think the dollar index climbs on to 96? And what about the rupee? Is the low over?
Yeah, so, I mean, the dollar index is not giving us any sort of clear sense of high conviction trend at this point in time. We've essentially seen a new trading range develop on that DXY, the dollar index, between 92 and 97 currently. The one small positive that we have seen, at least on the broader emerging market side and on the rupee at the end of the day, is that we've seen slowing momentum in the dollar strength versus the emerging market currencies, which includes the rupee at the end of the day. So we're looking for a period of at least consolidation in the near term. So some stability is developing, at least on the chart action.
So if you do believe that the Indian markets have topped out in the near term and the highs for the year are behind us, what would your 12-month target on the Nifty be? Earlier it was 12,000, but what would it be now?
Yep. Well, looking at what we're trying to gauge in the coming weeks is the downside potential. So there's two targets that we focus on. The first is 9,900, and our sort of worst case scenario is back to the breakout area, which is all the way down at the 9,200 points. Once we've found the low, we think then markets will start to set up a new consolidation pattern. So just to take you back, the previous sell-off in 2015, the market spent 18 months consolidating before you resumed the uptrend. So to see a period of consolidations to that magnitude would be more than likely the outcome once we found those lows.
For the moment, we'll work with 9,900. But what about the U.S. bond yields? Have the yields seen the highs? Have bonds seen their lows, or do they plumb even lower?
So very, very important price action occurred 2 weeks ago where we finally broke through that 3% to 3.11% resistance zone. It essentially confirmed a multi-year low in yields, and that doesn't give you just an upside target of 3.5 or 3.8. That gives you upside targets between 4 and 5 on a multi-year view. So the base case on that breakout is for yields to continue to rise.
Okay. Well, I also wanted your view on the auto stocks because I know you do track some of them. You had a sell call on Maruti earlier when we spoke. You're also quite bearish on some of the two-wheeler names. Do you see a breakdown in the charts of the likes of Maruti, Bajaj Auto, etc.?
So look, Maruti's already met the initial downside target that we were looking at. So any short-term rebound there, we think we'll still see further downside, the fact that momentum confirmed the lows. And Bajaj is the most recent breakdown that we've seen. So, if you're looking for fresh sell ideas in the auto space, Bajaj Auto is looking vulnerable too.
All right.
Okay. Lawrence Belanco, pleasure speaking with you. It may not have been very pleasant for the bulls, but there it is. That's what the charts are telling the master of the charts, that 9,900 is more likely at this point in time.
Okay, by the way, for the moment, of course, the sector of the day is really NBFCs is seeing quite a bit of thrashing. The other stock which is now looking interesting right now in terms of, again, a price volume breakdown is Reliance Capital. Just pull out that stock intraday. I mean, it's again, same sort of pattern, a bit of a price damage and open interest building up. So, the pattern that we saw in Repco as well, before that DHFL, now you're seeing the same pattern play out in Reliance Capital. Ashwani Gujral, Mitesh Thakkar back with us. Sandeep Bagle is also with us in our studios. Good morning again. Ashwani, so carrying the shot on the bank Nifty or 100-150 points from top, you want to take it up?
I guess festivities didn't last too long, but my sense is that people should be trapped, and I wouldn't be surprised if all gains are taken off on Bank Nifty, particularly because there is something going on in this housing finance which is taking banking stocks also lower. So my sense is that this momentum can rise further, and I wouldn't be surprised if yesterday's close comes in because the selling is fairly strong and has good momentum. Having said that, DHFL is a sell with a stop of 255, target of 240. India Bulls housing is now 10+% lower, so that's a sell with a stop of 875, target of 830. And Dabur is a buy with a stop of 414, target of 432.
Okay. I wouldn't have thought that you would give a shot on DHFL, considering the way in which it has fallen today and in all these days. Good morning, Mitesh and Sandeep as well. Mitesh, what's the next call now?
Yeah, so I think Lata, that profit booking call has worked out well, but I still have two buy calls given the fact that the FMCG pack looks interesting to me. Dabur is something which I'm positive upon, but right now I have a call on HUL as well. After a good decline, it's reversing, so buy with a stop at 1550, look for targets of around 1600. And RBL Bank is a buy, keep a stop at 540 and look for targets of 565. And on the shorting side, I think guess one housing finance company which is just breaking down is Canfin Home Finance. I think keep a stop at about 238.5, 239. and the stock can retest the earlier lows of 215 to maybe even hit lower levels as well.
Okay, there's a breakdown that we're seeing in a lot of banks as well, by the way. Don't lose sight of that. Yes, Bank is now down almost 5% before you know it, and huge volumes traded on Yes Bank. And now the gains in Federal Bank, whatever limited gains there were, everything is being wiped out. Federal Bank down about 1%. Sandeep Bagle is also with us here in the studio. Sandeep, hi. Morning. Greetings of the season to you. What are the stocks that you're looking at this morning?
Good morning, Sonia. I would look at a buy in a Gale, stop loss of 357, target 375, and a buy in a United Spirits, stop loss of 535, target 575.
Okay, fair enough. That's some sell calls. Ashwani, thoughts on some of these PSU banks which are now beginning to see a bit of a decline, Canara Bank and Indian Bank?
See, all financials are now declining because there is some impact that happens everywhere. So today is not going to be a pleasant day for banks. So whatever rally you had, take it off, and possibly more or less most financials are now shorts. Today is this bank nifty expiry, so maybe a couple of private banks may hold on. But overall, given the long positions that we've built over the last three or four sessions, I think bank nifty should come off some more, and PSU banks also will face selling because I think yesterday even there you had a bit of rally.
Okay. Well, gentlemen, thank you very much for giving us your advice yet again at 10 a.m. It's still in the green for the big indices, but only 0.5%, considering from where we began in the morning. And for the mid caps, it's been a punishing first hour of trade. We started off at almost 1.2% up as far as the index was concerned, and now looking at a 0.5% cut with barely 1 hour of trading, not even 1 hour actually, 45 minutes of trading done. The bunch of good news, the combination of good news has been used by investors, funds, traders to actually sell into these stocks. Not looking pretty over there, but we'll keep visiting. And it's not the entire NBFC pack, as Anuj has been repeatedly saying. The housing finance companies have come for particular punishment. I wouldn't be surprised. Maybe people are now thinking that NHB rules will be rewritten, with the Credit Suisse report pointing out that probably the asset recognition, asset liability recognition is not as good on the NHB side as it is on the Reserve Bank side, but it's really a vicious selling that you're seeing in housing finance stocks. Let's move away from this and get to the world of entertainment. My colleague Shireen Bhan spoke to Puneet Goenka, the managing director and CEO of Z Entertainment. He says Z5 is the biggest future bet for the group, and it will be EPS accretive in 5 years. Just listen to a slice of that chat.
Z5 will be the biggest bet for Z. We do expect that the business will turn around and become EPS accretive towards the 5th year mark. We are just about 6 months into the launch as we speak. We have already become the number 2 OTT player in the country. I do expect in the next 12 months we will emerge as the number 1 OTT player. This is only India. We have just soft launched the business in the international markets on 2nd of October, which was our 26th anniversary. And we hope to take it in the next 1 year to about 190 countries. A large part of our excess EBITDA, over 30%, is going behind this business. As I've stated earlier, I can very comfortably deliver a 36% plus EBITDA margin if I was not investing in Z5. But I am going to invest a large part of that 600 basis points behind it. Brand building will still remain core to television. So FMCG, which is the core of television network, I don't expect them to shift any significant monies out of television anytime soon. Anybody who wants to build a brand needs television. Digital offers itself as a very, very effective transaction medium.
Okay, well, Z5, they're working hard on taking that brand higher and growing content there. But that's the word coming in from Puneet Goenka. Let's move on, though. Crude has once again resurfaced above that $81 a barrel mark. Manisha is back with us to give us a roundup of all the commodity and currency action. Hi, Manisha.
Thank you so much for that, Sonia. Well, yes, we seem to be trading steady in the international markets where we are holding around that 81.5 mark in the global markets. The fundamentals are slightly contradicting, and that's the reason you have seen a flat move opening coming in for the Indian crude oil prices. On one side, it's going to be the US weekly inventory data, any developments with Saudi Arabia, the geopolitical tensions there. On the other side, it is about the Iran sanctions, and that would continue to put some premium into the prices. Most people do not believe that the crude oil prices will fall below $80 per barrel for the very near term. The longer term, of course, the expectation is that there is enough supplies in the global markets, and once that starts coming into the space is when you will see the crude oil prices actually continue to ease off. The US dollar index is what the markets are watching out for, and that is strengthened a bit, and that's putting pressure in case of the precious metal prices. Even with that, we are trading near 2-month highs for the international gold prices. The Indian prices have gone in for slight profit taking. 32,000 mark on gold MCX has been tricky to cross for many sessions now. The base metal prices have been taking a lot of cues as well. On one side, it has been the Chinese data yesterday, which wasn't very bullish. But then again, the equity markets taking some strength, some buying is what really seems to be supportive. Copper prices, for one, of course, has seen some profit taking in Shanghai. That seems to be weighing on to these prices. But aluminum and the steel contracts have continued to do well. And that is the reason you have seen nickel and zinc prices as well trade nearly 0.25% on the higher side. Trading strategies is what we have from Nirmal Bang today on crude and gold. They are looking at the crude oil prices to continue to see some pressure, but a sell call in gold as well is what they're advising for the day today.
Okay, Manisha, thanks a lot for that. Well, the Sensex is off its highs by quite a bit actually. Now trading just, it's still trading almost 200 points in the green, but we were better off about half an hour back. The real pain is felt in the mid-cap index, down more than 100 odd points. We'll take a break. Up next, we'll take stock of the expectations from Reliance this quarter. The numbers come in post-market hours today. Probal Sen of IDFC Securities will join in to give us his views.